So yes everyone, it's BG Dollars and I'm back for another video. Now today we're looking at the Bitcoin crash. Look at it, it's just fallen off a cliff. It's down to 19.5k. It did fall all the way down to $17,600 there. Devastation. Devastation for the Bitcoin market. Devastation. And just for crypto in general. But of course Bitcoin, bomb. We hit down all the way to $17,600, $500 there. And obviously it's recovered a bit, but I expect this to go back down to these sorts of levels. Maybe even drop further, possibly even drop further in the coming few days. So yeah, that's basically the Bitcoin story. I expect us to get up to the 20k mark, maybe around here, 20,200. But yeah, we've got a little report here on why Bitcoin fell, and just taking you through the week. Here's what happened from CNBC. Bitcoin briefly dropped below $17,800 as sell-off accelerates. Here's what happened. Now, I do like to go through the key pointers from CNBC. Bitcoin fell to about 17,000. We've seen this. And of course, Ethereum down below $900 there. Oof. Bitcoin bounced back and Ethereum bounced back. But yeah, to see where Bitcoin was at, look, 68,000. On some exchanges, it was up to 69,000, wasn't it? And yeah, that was only in November, people. Less than a year ago. It was at 69,000 now. Look where it is today. It's just absolutely demolished, to be honest with you. Bitcoin plunged to about $17,700 and Ether fell to about $197 at around 4:15 Eastern Standard Time on Saturday. The world's two most popular cryptocurrencies down on 35% in the past week as both breached symbolic price barriers. Bitcoin bounced back, of course, as we know. It's up to about, well, look, 19,412. So we've bounced back a little bit, but I wouldn't really call this a bounce back. It's more of just a retracement for continued sell-off. That's how I'd like to put it. It is carnage. The carnage in the crypto market is partly caused by pressure from macroeconomic forces, yet spiraling inflation. Of course, inflation came up very high, didn't it, for May's CPI, and yeah, that just put everything into the shit. Stock sold off, crypto sold off, everything sold off. The succession of Fed rate hikes as well. Of course, the Fed obviously later on the following week came out and raised it by 75 basis points, which was the highest for like 20 years or since 1994. So yeah, that was all pretty nuts, and that is why you're just seeing crypto getting absolutely smacked up here. It's just getting beaten into the dirt right now. Bitcoin now trading at the lows in December 2020. December 2020. The week started with crypto prices plummeting and Bitcoin falling as much as 17% at one point in the day. It seemed like the crypto winter was here. Oh, the crypto winter. So this has started off on Monday. In the chaos, Celsius, a major crypto staking and lending firm, shocked the market when it announced that all withdrawals, swaps and transfers between accounts have been paused due to extreme market conditions. Alright, extreme market conditions. So Celsius came out and said, look, we can't do this. Bitcoin's plummeting 17% at one point in the day on Monday. And look, we're going to have to stop withdrawals, swaps and transfers, which obviously just ain't good at all for any of the cryptos, really. And that just continues the selling. The email address to Celsius, the platform also said that it was designed to stabilize liquidity and operations. What a load of rubbish. Look, it just couldn't deal with the selling pressure. If more and more people sell and there's no buyers for it, then they're going to have to put it on hold. Because if no one's buying it on the exchange and everyone's selling, then you're just going to get a stupid price. Stupid prices. You're going to get a flash crash where it goes all the way down to like $1. If everyone's saying no one wants to buy it, that's what's going to happen. So Celsius effectively locked up its $12 billion in crypto assets under management, raising concerns about the platform's solvency. The news rippled across the crypto industry, reminding some what happened in May when a failed US dollar peg stablecoin project lost $60 billion in value and dragged the wider crypto industry down with it. Of course, that is what's going to happen, people. If stuff like this is going to happen, it's going to drag the whole crypto market down. Celsius now offering a yield of up to 18. See, that is not sustainable. A yield of up to 18.63% on their deposits. That yield, quite frankly, is not sustainable at all. That is high risk lending to people who quite simply can't pay it back. That is absurd. Only people with a bad credit score are getting loans for 18.63% interest on them. So if you go on to Celsius and say, look, I want this interest on my coin I'm getting, I'm willing to loan my deposit out to other people, but you're getting 18.63%, you got to think, hang on a second, if I'm getting that high interest back, who are they loaning it to? Are they going to be able to pay it back? Am I going to be able to get that interest? That's what you got to be thinking when you make these sort of decisions, because 18.63%, unsustainable. And the people that are doing that aren't getting it back, because if you have a good credit score, you can get a loan well cheaper than 18.63%. You can get an interest rate of like 6%, 5% if you have a good credit score. So yeah, it's likely getting lent out to plonkers who just quite simply aren't going to be able to pay it back. So a product bank would offer, except with none of the regulatory safeguards. Yeah, and there's also no regulatory safe. Do you say regulatory? I can't. Regulatory safeguards. Look, moving on. Those crazy high yields were what eventually. Look, I've been stumped by that word now. Those crazy high yields were what eventually came under scrutiny. See, of course it's going to come under scrutiny. This risk certainly seems like it's just the beginning. And that's the thing, it's not just Celsius that offer these sorts of percentage. I see loads of crypto exchanges doing this. And it's just quite simply not sustainable for long term. And one day you're going to get caught out. You're going to get caught out doing that. What I'd say is on the decentralized side, a lot of these DeFi protocols, a lot of these positions were over collateralized. Yeah, it was just a mess for Celsius. And that was on the Monday. Crypto markets appeared to stabilize on Tuesday with Bitcoin hovering. So that sent the markets to plummet. Bitcoin was around 22k on the Tuesday. Investors were assessing the fallout of Celsius. Meanwhile, other crypto firms joined a growing list of companies cutting staff to try to shore up profits. Coinbase, huge exchange within the crypto market. You know, a lot of users. Very, very popular. Of course, their fees aren't exactly the lowest, but it's very easy, simple, and they're the most advertised one out there. But yeah, huge exchange in the crypto space. Coinbase announced it was laying off nearly a fifth of its workforce due to crypto volatility. The company had previously cut spending and even rescinded job offers in the hopes of stabilizing its business. Look, this company employed far too many people in the last couple of years. Because I'm a Coinbase investor, so I invest in the actual stock itself. And I saw on their earnings report, they had employed masses of people in the last 1 to 2 years, tripling their workforce. And I was thinking, what the hell are you doing all this for? You know, you've just expanded so much, and I'm not seeing a flipping app improve. I'm not seeing Coinbase app improve other than just adding more, what's it called, altcoins. That's all I'm seeing a difference in. But you've like tripled your workforce. But there we are, look, laying off nearly a fifth. There was going to be a point when interest rates start going up, when the money starts running out, when the crypto keeps on dropping, these companies are going to run out of money and they can't pay all this workforce. Because they employed this workforce when Bitcoin was skyrocketing. And now, look, it's not happening. They are unable to pay the workforce and they have to lay off. We had the recent inflation report that came out that I think surprised many folks. Yes, of course, it surprised many people. People thinking inflation would have been less than the May report. The April report, I mean. People thinking that inflation's peaked in March at 8.5%. We've got the 8.3% in April. Boom, we're looking for an 8.3, 8.2% again in May. But no, it came out 8.6. Boom. Fear everywhere. We've had Jamie Dixon and others talk about up-and-coming economic hurricane. And given what's happening in the economy, it feels like the most prudent thing to do right now. Crypto.com recently announced the start of production of 260 people, as did Gemini. Of course, this is going to happen when cryptos start going down. They're going to be receiving less money. And they've employed massively during the recent Bitcoin bull run when it went up to 69,000. They were earning a lot of money then and they employed massively. And now, look, the money's not there to pay their employees. So they've had to lay them off. So what day are we on to now then? Wednesday. MicroStrategy CEO Michael Saylor appeared on CNBC Wednesday morning to discuss concerns around his firm, which has made a $4 billion bet on Bitcoin. Saylor has said the company doubles as the first and only Bitcoin spot exchange trade fund in the US. So investing in MicroStrategy is the closest you'll get to a Bitcoin spot ETF. Oh, MicroStrategy has used company debt to purchase Bitcoin. Oh, I do not like that. I don't like that. They're taking out loans. They're taking into debt to purchase Bitcoin. I don't like to see that. In March, they would have been absolutely screwed. Saylor decided to take another step normalizing Bitcoin-backed finance when he borrowed $205 million using the Bitcoin as collateral to then buy more of the... This is a mess from what's his name? Saylor. Who is it? Michael Saylor. This is just a flipping mess, this. He's taken out a loan. He's used the money as collateral to get a loan out to put then more back into Bitcoin. That is honestly The worst thing I've ever seen in my life. We have 5 billion in collateral. We borrowed 200 million. Okay, look. They've got a lot. Okay, it wasn't... Okay, all right. The fact they've got 5 billion, that's more understandable. Yeah, okay. It's not a highly leveraged loan. They're not taking out masses because obviously they've got 5 billion in collateral, so it's not too bad. I was thinking they only had like 1 billion or like say 400 million or something, 500 million, and then they would have been screwed. What I'm doing, I think, is doing my best to lead the way and to normalise the Bitcoin-backed financing industry, said Saylor. Mate, this Saylor guy, he needs to get on the seas. Get it? Okay, look, I'm sorry. Look, I've got to do something. To make it a bit. As Bitcoin prices tanked this week, investors worried the company would be asked to put up more collateral for its loan, but Saylor said the fears were overblown. The margin call is much ado about nothing, Saylor told CNBC earlier this week. It's just made me Twitter famous, so I appreciate that. Look, this guy's a joke. Then on Wednesday afternoon, Federal Reserve raised its benchmark interest rate by 0.75%. Yeah, I got it right. It's the most aggressive hike since 1994. Yes, very, very true. Crypto prices initially rallied on the news as investors hoped we could avoid a recession, but that rally was short-lived. Lovely stuff. Right, Thursday now. We were back in the red on Thursday. Bitcoin fell to around 20,000. So what day was Thursday? Let me have a little look on the calendar. Thursday, we're talking the 16th. No, it didn't look in the red to me. Oh, we got a little bit of a rally, but then, boom, we went straight down. Yeah, okay, on the 16th. Down to 20,000, okay. It's making sense. The losses were closely tied to a sell-off on Wall Street in which the Dow fell 700 points to its lowest level in more than a year. It appears that investors can't shake the fears of recession, and some say it could take time for... Look, if the Fed are raising by 75 basis points, a recession is coming. I'm sorry. Oh, unpopular opinion, but a recession is coming. You got to be stupid to think it's not. I think that we're in a long drawdown period. What a load of toss. I think that we've taken the elevator down, and I think that we as an industry are going to have to take the stairs back up and climb out by building real utility. Gunter, a healthy washout. You're seeing a healthy washout, yeah? Okay, Gunter. Look, right, moving on to Friday and Saturday. Carnage, again, the word carnage. It's come up a few times in this report from CNBC. Mate, are they running out of words to use? Carnage in the crypto market shows no signs of slowing down as Bitcoin and Ether continue their sell-off at a rapid clip on Saturday afternoon. This comes as crypto hedge funds and businesses face growing questions about insolvency. Of course, a lot of exchanges have these issues. We had financial instability because of this opaque leverage. You just couldn't tell where all the risks were building up. In some ways, this is just an age-old story. You're borrowing short and lending long. And I think it's really unfortunate that people lost money. And I think it will in some ways set back the space because you will lose some early adopters or some of the people who just came in new to the space. You're borrowing short and lending long. That's not what you want to hear. But Krasky also says that investors are still looking for quality crypto investments. The fundamentals talking here and the adoption curve that we see, the issues that are coming in, how you can get your financial system to operate at the speed of the internet. Those are things that need to happen, he said. Right, so look, let's just... Bottom line is, it's going to the shit, isn't it? Bitcoin, look, bomb. We hit 17,500. We've recently had a little bump back up to 20. I think we're going to reach here and we're going to sell back down to 17 level. If this is the bottom, we won't make a new low. If this ain't the bottom, we're going to continue to sell off into the 16s. That's my opinion. And on that note, is BG dollars. Be careful out there. Make sure if you're in the crypto space, if you're a long-term investor, you have to buy at these levels. If you're a short-term trader, you have to be selling because the trend and momentum is downwards. That's all from me. BG dollars over and out. I'll see you in the next one.